Good morning. Welcome to OptionsTender. It's Friday, February 21st, 2025. Welcome, everybody. I want to show you, again, bonds. We're going to look at those fairly often because the idea is starting to play out. And I want you to kind of look at it in another perspective. I know what the popular belief is. Inflation's going up, stagflation, that sort of thing. So we're going to check that out, talk about that for a second, then we'll do the top-down analysis, try to run through those really fast. Not a whole lot's changed. We had a little bit of a negative day today, but we're still in a stance where, the setups for the bulls and the bears are still there. Okay, we're doing this intraday about 11:30 a.m. Eastern Standard Time. So if you are interested in getting these videos intraday, consider becoming a YouTube member, 99 cents a month. All right, let's jump into this. Thanks for all the support, likes, subscribes, all those things. We have TNX. They changed the ticker. So if you used to use just the TNX, it has CGI as well. We're just going to look at it real quick on the weekly time frame. And you notice we've had this bearish rising wedge, broke down from it, and in the weekly time frame, you get this really good perspective of how strong the wedge back tests have been with just wicks off of them, and we're really starting to curl down from the 8 EMA. So with this week, if it closes like this, just another doji, another wick, and I do believe that we'll start to descend at this point, just in the manner that I was talking about, and tech will be the week leader in all of this at a certain point. I don't know if it's after we break these lows, but tech is going to eventually take over. So now we mentioned inflation. Now, from our headlines, from the popular belief, inflation's going to continue. That may be so, but as soon as the market, and especially if the market takes a large decline, I'll say, then that will smash. And I'm not talking about 10%. I'm not talking about 20, likely over time, 40, 50%. That will crush inflation. Now, if through the 70s and 80s, for example, you have that sideways consolidated move that took over 15 years, I want to say. What started the big boom in the 90s, well, that you can consider some sort of stagflation in a sense. Inflation never really went away. It went down and up throughout time, but price and the economy didn't crush it. Do you see what I mean? That's kind of the overall perspective that I take. Inflation's going to last. We had the money supply out there. Unless the market really tanks and really puts that under control, that's what, money supply, that's what controls inflation. Interest rates will go down automatically because of the bonds. People buy into safety. The TNX will go lower in order to re-stimulate the economy. It's just the way the market works. Okay, so that's just a gist. That's just a gist on our situation there. Now, SPX, weekly time frame. For all of you that are brand new here, we just constantly harp on where we're at. So it's a complete bull bear scenario, easy. Now, I know on the lower time frames this hasn't been easy, but just in a mind frame set, it's just bearish underneath resistance, bullish above. 1929 trend line, 2000 trend line. I have these lined up perfectly. We have the 2008 trend line with the 2021 trend line. We're at that confluence right now, right here. We're rejecting off of it one more time. So we've rejected off of it 1, 2, 3, 4 times. I think 3 officially. But from this perspective, it does look like the 4th time now. Let's go to SPY. And with SPY, we were just looking at the candles here, we still have time in the month left. So let's see how this month ends. It is a bearish time period. I'm sure you guys seen that the sentiment, the seasonality is bearish in the second half of February going into March. So we'll see how that ends. Do we have a wick just like all the other ones here? We just couldn't hold 3 months. We just couldn't hold over that 605 number. So let's see, we're barely above it. Let's see if we break down from there, have another wick. That's going to be bearish. We have this breakout. We have this constant attempt for a breakout, and I think that will fail off of these trend lines. Now we get above there, great. You gotta look at these bullish things, and there's some good setups. If price breaks above there, we'll look at some of those beat up big tech stocks and such. Until then, that's a negative. Tesla would be my favorite, by the way. Okay, a clear look. Rejection, throw over, rejection. I mean, this is pretty, but it's very tiring. And I get it. We talked in Discord. We're tired, and whether you're bull or bear, your bullish positions, you get faded out of it. Bullish position, faded out of it. Unless you're a scalper or a theta master. Inside joke, then you're not doing very well, or you're getting very tired. I'm a swing trader. It's very, very tough to swing these in here. And, we've been using hedges, but with this price action, you really can't even use hedges at this time. It's just not going to help. Okay, so we're just taking our bearish stance, and we're putting our back against the wall against these trend lines that are up here. Okay, and on the weekly time frame, it'll be very important to watch that 20-week moving average. I suspect a scenario that will break down from here eventually. We're going to break down, and then we'll back test that 20 moving average after hitting these very important levels. And remember, we talk about 560, the zone around it often, and that we'll back test and have the kiss of death for the 20 moving average. And that will probably be our wave 1 into wave 2 scenario. Here's another look at least time and price, and also our very important targets that we had back in the day there. You see how important they were, and we had rejections off of it, but held that 20-week moving average. So just to, KISS, just to keep it simple, stupid. You can use this 20-week moving average. That's our trend indicator on the weekly. Super important in our trading. And these targets, you see that they're so important. And when we get back down there, that 20 has been important again for the 1, 2, 3, 4, 5 candles, maybe 6 candles in there, 5 candles to hold price. And I think that's eventually going to break. And you see this important resistance will be support at this time. I know I have this arrow. The only thing that this represents right now is just, price has fallen that quick, that fast, that sharp in that distance before. Actually, a series of times during the start of a recession. So I just want to keep that as a reminder. Now we're in this time cluster. We already have a top in place so far. It doesn't mean that we can't make another high, but I just wanted to show this cluster we were looking for a top, and I think that's the case. So I'm going to leave this cluster on here just to start next week. If we do not make a new high, then we were correct that this high was done in this cluster. And therefore, what better way to have a low into this next cluster? And that goes out to April. So we'll see what happens with price. Maybe price comes down fairly rapid, or maybe it takes a long time and we get a low here, or we get a bounce and we get a high into the cluster. So that's what we'll be looking for. On the daily time frame, just another look at how price just keeps reacting off of those major trend lines, and also making a pattern megaphone sideways pattern here, and rejecting again off of this top zone of the megaphone, a little throw over there. And so where is price stopping right now? It's stopping right on the 20 moving average and this supposed bull flag. Okay, so like I said in the last couple days, price has no business really breaking down any further than this, with this being a setup for the bulls. Now I know that the trend is still up here, and you have the 50 moving average. It's going to be real ugly, but I suppose something can be counted off of there in some sort of wave counter structure, keeping a higher low. But this is the next kind of intermediate low that we have to take out in order to be to break down structure. All right, and I do think that's going to happen. We're breaking down from an 8 EMA. We're really going to have to hold here and break to the upside and get on top of these trend lines here to be any bullish at all. So time and price. Again, we're in a cluster right now, so we'll see how that goes. And I know there's a lot going on here, but we'll see if we get at some sort of low. You see these, there's a lot of time price relationships right in here. And that goes into the end of February. So let's see if there's some lows or something. I know I'm pointing down here. It's not actually. Let's see if there's some lows here. And there is a Elliott wave count where this is the 1, 2, 3, 4. And so technically this channel, if this channel holds here, that would be still in a bullish stance overall, but I think it's getting a lot more destructive at that point. Going to the 65, now we can talk about again these setups. Nothing's really changed for them. So this is a bull flag, broke out, starting to make another bull flag. So we're starting to make a higher highs and higher low structure still, right? So that's bullish. Of course, there's buyers when that happens. Well, in order for it to break down, I think the setup here for the bears is at least a 1, 2, and it might be setting up a 1, 2. Now, if we eke out another low here, we could argue that this is going to be a 1, 2, 3, 4, and a 5. And so then we can just get a dead cat bounce, maybe test those levels here again for 50%, 60% retracement, and then head lower from here. If it keeps this 3-wave look to it, a 3-wave, the only thing that we can say for a setup for the bears is that this is a 1, 2, 1, 2, and heading lower. And of course, if you're bullish, you're looking for this being a large 1, 2, and then 1, 2, 1, 2, and you're looking for much higher. I know there's other ways. You can say 1, 2, 3, 4, 5, and what is that? You know, is the question. But if this is a 1, if this is counted as 1, 2, 3, 4, 5, I think you might have some sort of ending here. I'm not sure exactly, but you know, just to be honest, it's so speculative. You just see that this range, you can almost count this as, if you get a 5th wave up here, as being a corrective move to where this is probably an A, a larger B, and then a C correction to the downside. I know we've talked about that in the past. If you're sticking along with me, you get all these speculative counts, right? But if we keep it in a simple form, then you look, if we break above that trend line, which coincides with the 1929 and in 2008 trend line, it's as simple as that. We stay below it, we're going to drop. You get above it, then we have something to put our backs against with some long plays there. And again, with that count being, you know, a larger bullish play, you could have the 1 at the top here, and like I just said, some sort of A, B, and then a large move down to a C, which would probably end right in our target area anyway. The 560 zone that we continue to talk about. So whether you're bull or bear, I think you could look for this zone here. But if this is just a complete bullish structure, you have no business really breaking down any further from this point. Okay, and this should ride the 8 EMA. If this is truly a wave 3 that we're going to, with this being the 1 and the 2, and if we're starting wave 3 and we're going to get some momentum breaking out, it should follow along the 8 EMA and maybe the 20 hold on to, which we're testing now. Okay, so keep it simple in your mind. I know I'm babbling about structures and counts and stuff like that, but altogether we have negative divergence into resistance. QQQ. Sort of the same look here. If we start breaking down from this trend line, then we have this next point here at 528.69, and that's the options expected move. It's also the top of this megaphone breakout. Once again, the price action has no business breaking down from this point. That's really bearish. That's a fake break, and we'll see what happens after that, if that's the case. So we would have a 1-2 setup, and we're continuing on wave 3. So if we do bounce a little bit more, maybe it's a 1-2 setup. But it looks pretty bearish right now. So SMH, we got out of our Nvidia trades. It didn't work out very well for today, and we're not going to trade it because the premium's too much into next week. So we're using SMH, and just like the other indices, SMH can continue to move higher. We have a target that closes the gap here. So although I took a trade to the downside, we're going to add on to our shorts if price makes it up here, with Nvidia being in earnings next week. Maybe it pops this last move up here for just a lower high. All right. The setup would be right here. We got above the 62% retracement. So it makes me think there's unfinished business at the 786 up here. And so if price holds on to this 62, I know it's a little bit below there, but gets back above this level, I think the most likely spot here is the 261, 262 price zone at the 786. And that closes the gap right there. And that sets us up for a lower high for a 1-2 setup. And you know, I've talked about this. In the overall bear picture, we have a 1-2 setup playing here, and then we should start to break that lower. I was actually looking at this one a little bit differently. With this, I have this nice geometric line that comes back here. That's why it's that far back. But just like SPY, if you take this off, just like SPY, this has just been an expanding formation. And so it kind of plays in what everything else is doing there. Do we actually make a new high? This is a trend line back from the lows, so it can move a little bit higher, because I was on the daily time frame touching these lows here. So is it in the right place? So far, I think so. But you know, if this goes higher to close this gap here, you can call this a zone where it should be just a little bit above too, and maybe that's where the real back test is. So there's room to wiggle here. IWM. This one is just doing exactly what we talked about. It was starting to curl over with the 50 and the 20 moving averages. So it made its high up here, and it just couldn't get above the moving averages on the daily time frame. We looked at those yesterday. So, and we had this triangular formation here in equilibrium, and you see how the 20 or the 50 and all the other ones now here are really bunched up. And when that happens, that's when you know a big move is happening, and it's starting to happen to the downside, breaking this triangle here. I think this one is going to go much further to the downside, meaning that this was a really shallow 50% bounce from a 1-2 setup, and we're into wave 3. And we should see that in SMH starting soon, probably after Nvidia's earnings. DIA, same thing. Go back to the 65. Just had this breakdown from a equilibrium or triangle formation here. Not looking at this as an ABC at this point. I think this is just going to break down further, dragging the market with it. And VIX is holding up really well. I know we had a drop here today a little bit earlier, but just getting a tight price action in here, and I think we're going to have a big spike coming up next week. We have a nice move here. If you haven't seen this yet, I'll do the top down. It's super important. This one is from the weekly. You see the bullish rising wedge, had this breakout from it, back testing, and really holding on to this this consolidation area, the range down here from 4 to about 15, we'll call it. It's a little lower, and then up to about 22. It's been a beautiful range back and forth, and we already hit the bottom of the range again, and we're getting an inside day. So I think this is setting up for, or an inside week, excuse me. I think this is setting up for a big move, and I think it's going to be to the upside. If it does break down, then that's obviously telling you that the market's probably breaking up. On the daily time frame, you can see that that breakout from the bullish falling wedge, and then we're just consolidating. I know it's a huge flag there, but this is a flag pole. We've got the flag, and we're just consolidating, getting really tight in price action. That's going to break down or break up at some point here. And whichever way it breaks, you better hold on tight and ride with it. And here's a closer look on the 65. We're just holding really nicely on this lower wedge here, getting price action, forming some sort of market structure. In my mind, this is a left shoulder, a head, and a right shoulder. I said that wrong because this is the lower. This is actually left shoulder, head, and right shoulder. It's much easier to see on the daily time frame, and this is going to be a flag breakout here. All right, you guys, that's what I have for you. Just pay attention to the bonds. They're breaking down. I think that's going to continue throughout the weeks to months in the future, actually several months. But all right, thanks for joining us here at OptionsTender. Have a wonderful weekend, and we'll talk to you soon.